Hello again, investment fans, and welcome to our latest Market Watch report from the Zikuski Group. I'm Dion Zikuski, Branch Manager and Director of Wealth here at Scotia Wealth Management in Central Alberta. And it's now March, and despite markets starting the month like an angry lion, we're seeing things get better lately. And perhaps as we're around St. Patrick's Day, a little luck of the Irish will help us out too. I even have a little bit of green in my tie here as we speak. In our talk today, we're going to check out a couple timely topics. One called the market power of seasonality, plus we're getting close to April and it's getting close to time that we all have to file our taxes to the good old Canada Revenue Agency. So we're going to look at some things that you may be able to deduct or use as tax credits for that. First, as we get closer to the first quarter of the year, markets continue to grind higher. And reasons are varied, but we see equities or stocks moving in the right direction as there's been decent corporate earnings out there, a pause in interest rates, which is always a good thing, quietness in the world trade issues, especially between the US and China, which looks like that's now going to extend into April, and a topic that we're going to look into further called seasonality. Now you may be wondering, Dion, what the heck are you talking about? Well, history has shown that due to money flows, markets tend to perform better at certain times of the year, and this is what seasonality refers to. So let's check out the following chart and it'll explain further. What we're looking at here is net flows into equity funds as a percentage of total market cap. And that's an average over each month in Canada and the US. And you can see in the first 3 to 4 months, both in Canada, which is the red and white stripes, as well as the US, which is blue, we see more money flowing into the market, and this is mainly due to retirement account contributions. So the result is that with this money flow, seasonality comes into effect. As markets tend to rise, it's kind of a rising tide floats all boats higher scenario. Now, of course, this doesn't mean that other parts of the year are not favorable. It's simply that early in the calendar, we get a bit of a booster, as we're seeing right now. As successful investors, we must always take the long view and make sure our portfolios match up with our retirement goals, our estate planning goals, tax planning goals, and so on. And speaking of tax planning, yes, it is that time of year when we begin to prepare the joy of filing our personal taxes. But did you know, as Canadians, there are potentially hundreds of different tax deductions and credits available out there to you? For a complete list, you can simply go to the Canada Revenue Agency website or just Google CRA deductions and credits. But let's check out the most common ones that are missed and see if any of these apply to you. From our friends at Intuit Canada, we've compiled the top 6 missed tax deductions and credits. Number 1 is medical expenses. So did you know that you can include medical expenses for your immediate family, but also other dependents such as an elderly parent? Medical travel expenses, so if you have to travel longer than 40 kilometers, or if you pay private insurance premiums, or other out-of-pocket expenses can be deductible. Now there is quite a list at the CRA website of what's eligible and what isn't, so be sure to check that. Also, if you pay union dues, professional dues, or any licensing fees, these may be deductible if you use after-tax dollars. Third is moving expenses. So if you've had to relocate for work and you've had to go more than 40 kilometers to do so, it may be deductible. And you can also include travel costs, document fees, utility hookups, and so on. Be sure you keep all your receipts for this, as the CRA loves to audit moving expenses. If you have any loans as far as a student loan or investment loans, the interest paid on those loans is tax deductible. So just make sure to keep track of that. Childcare expenses is another one. If you have childcare costs so you can work, run a business, or attend school, these are tax deductible. But also, summer camps may qualify too as an expense. And last is employment expenses. So any out-of-pocket costs for home office, tools, or other expenses related to your job may qualify. Keep in mind though, a conditions of employment form or letter may need to be signed by your employer to make sure that this is legitimate. Of course, at the end of the day, be sure to keep your receipts, and you know what, check with your accountant or tax prep professional to ensure accuracy. At the Zikuski Group, we always recommend that you do work with a professional to prepare your taxes, and if you need a referral, just let our team know. We're happy to provide one. We work with some great people here in the Central Alberta area. And that's all for today. As always, give us a call or email if you have questions about your customized plan, and thanks for watching.